How's it going, everyone? Welcome back to AZ Trading. And a few days ago at the start of the week on Monday, I posted a community post with a little screenshot asking you guys to find out which trade do you think I would have taken in this piece of price action. And looking through the comments, you guys are too flattering. You think I'm winning all my trades, but in fact, this trade that I'm going to be talking about today will be a very interesting case study because it is actually a losing trade. And you know I like to be very selective with my trades. I like to trade A+ setups or trades with as many A+ criteria as possible. So even though that this trade over here had a few A+ criteria, you can see with those executions that this trade resulted in a loss. So a great point I want to put across in this video is no matter how great your analysis is or how high your win rate is, there will always be losses in the market. However, when you do lose, you must have the skill to know exactly how to lose, meaning to predetermine your risk, and when you lose your position, that you lose exactly what you predetermined and not $1 more. But before I get into the trade that I saw on the Monday, today is actually Thursday, and here on Thursday you can see we've had some bearish price action, and within this bearish price action we have a raid, we have a market structure shift, we have a deep retracement into a return area. So what if I told you guys I also had a short in here that turned out to be a winning trade? You wouldn't believe me, right? There's no executions. But never fear, you know we always apply relative strength, meaning if we're looking to short, we'll short the weakest of the indices. So comparing the Nasdaq with the Dow and with the S&P was the weakest of the three, and this is a bearish RMR trade that I took on the S&P. However, this is a trade that I'll talk about in my next video, so stay tuned for that. This was actually a banger of a trade, and as you can see, we still have a little partial running. I'm just going to time my partial with these Nasdaq equal lows, so once my alarm goes off here, then I'll take off my final partial on the S&P. Alright, but enough of that, let's get into the trade that we'll talk about for this video. Alright, so the pattern that we like to trade with is the RMR pattern. And so as the week began, you can see we have a clear bearish sentiment, so lower lows and lower highs. And what this means is liquidity underneath the market is constantly being taken out, and the liquidity above the market is being left untouched. So as soon as the New York Open ticks and the Equity Open ticks, this was the raid that I was looking at, and this was the start of the RMR. And since price broke sentiment during the raid, as well as reaching a very low time frame 3-minute gap over here, in my eyes, this was an A+ raid. After the raid, we look for a market structure shift, and immediately after the raid, we had a very strong, decisive bearish movement. And in order to have an A+ market structure shift, the shift needs to be very decisive, as well as leave a gap in a very deep premium. So over here we have a gap that's been left very high above, and we also have another gap down here, and all of this is overlapped with a bearish order block. So this market structure shift in my eyes is also an A+ market structure shift. I've always colored my gaps blue and my order blocks yellow. Okay, so during that market structure shift, price has dumped very heavily and started to retrace into our return area. However, what made this setup such a high probability setup in my eyes at the time? Alright, in hindsight, you can see that the trade did fail, so this may not be the best example of what an A+ setup looks like, but you shouldn't take my word for it anyway. Just through my own experience and trading, when there are so many A+ confluences, that just makes a high probability setup. So what I wanted to say is at the bottom of that market structure shift, if we look to the left, it looks like we've also raided a swing low. However, if we zoom out a bit and we're not too zoomed in to the charts, you can see that this swing low also made an equal low over here. So going through my mind right now is the liquidity under here. The liquidity under here has been blown up. There's so much liquidity down here now, which means it's a very likely objective. And so price can just as easily retrace a little bit and dump to get the liquidity. However, we're not going to enter down here. The plan for the RMR and the plan for my A+ setup is to wait for a very premium selling area. And if price gives us that opportunity to sell up here, we would be getting a much better price and then we'd be targeting those equal lows. So you can see with the context, we had a raid that broke sentiment, reaching a gap. We had a market structure shift that was very decisive, leaving an order block and a gap overlapped with each other. We had an objective of liquidity that was generated right before our very eyes, making it a very likely objective. And so as price retraced through this gap and tapped into that order block, I placed my short with my stop loss at the top of the raid over here, no lower, no higher, because if you have a stop loss lower than that area, this doesn't give your trade much room to breathe. Price can simply retrace further and then go in your direction. This wouldn't be an area of invalidation. And same thing, if your stop loss is above this area, in my eyes, it's just not that necessary, since if price reaches this swing high over here, what's been formed? Liquidity, equal highs have been formed, so it's even more likely for price to just continue up. So why not just put your stop near the area of that swing high, since this would be the most logical area of invalidation. The most logical area where if price broke it, my entire trade idea is just wrong. And if you can accept that if price breaks an area that you believe you'll be wrong, then after breaking that area, there should be no reason for you to even want to stay in the trade. So yep, this was the trade. I've got my entry, got my clean objective down here, and overall on the higher time frame, I am also looking for price to just shit itself, which is why I was looking for a bearish trade. You may be wondering, there's a 1 minute gap up here. Why didn't I have the patience and wait for an even better price and wait for price to reach this 1 minute gap before entering as a short? And something to keep in mind is if you wait for a better entry or a more optimistic entry, your stop loss will be much smaller. However, your risk percentage will be the same. So what does that do to the lot size or your position size? It makes your position size bigger. So if you wanted to wait for the most optimistic entry, then you'd be rewarded with the fattest lot size that you could ride to your objective. However, price reaching these really optimistic entries is just much less likely than reaching a less optimistic entry. And honestly, the entry that I got, I was actually very happy with. If I draw a fib from the top of the raid, bottom of the shift, my entry was almost at 80%, which is already a very deep retracement. Alright guys, and after I took this trade, I did a bit of journaling just to see if I missed out on any key technical information. But usually after losing trades, I don't look too much into it. It's just part of doing business, since you know that over a period of time and over a sample space of trades, you will be profitable as long as you have the strategy to do so. But my little investigative mind decided to have a look at if there were any reasons that this trade would have failed. And if I zoom out to the 5 minute time frame, you can see on Sunday, the start of the week, we had some relative equal highs, and also above those highs we had this little 5 minute gap that had not been completely filled in. During my trade, I did see these equal highs, I did see this gap. However, they just weren't as significant to me. I didn't think price would retrace as deep as those highs, especially after an A+ decisive market structure shift that was just preceded by an A+ raid breaking the sentiment. After a strong bearish leg that also formed equal lows, my mind was thinking it is just so much more likely for price to hunt liquidity rather than take out buy side again, which was taken as sentiment was broken. But what can you do? In hindsight, price raided those Sunday equal highs, reached the Sunday gap. So this could be the raid. After the raid, we had a market structure shift. And during that market structure shift, if I draw a fib, bottom of the top of the raid, bottom of the shift, price retraces above the 50% level. So this would be a fair price. So this could be a hypothetical short once again, with your target as those equal lows, stop loss at the top of the raid. But by now it's already 1 p.m, 2 p.m, which means it's probably 5 a.m. here in Australia. So here I'm just sleeping and dreaming about my loss. And this trade overall, you can see if you decided to take it off at the end of the day, around 16:30, you would have been in a profit. But also overall, those equal lows were left untouched and you would have been stopped out on Tuesday. Funny story, those lows on Tuesday were just about reached but not taken. So once again, the liquidity down here was generated rather than taken, which made it an even more key area. And so being such a key area because of the liquidity generated, that's what led me to have a bearish bias towards those equal lows for the following days. And if you had a bearish bias on the following days, we just look for bearish RMRs instead of bullish ones. And over here, there are so many bearish RMRs: raid, market structure shift, retrace and return into a gap. Another one, raid, market structure shift, retrace, return into a gap. All these shorts would have been absolutely nuts to take, with so many objectives that you could aim for. You could aim for the gap, could aim for the liquidity, whatever you like. And once again, here on Thursday, another raid here, market structure shift, retrace into a gap, and another short into those equal lows, which is this trade here on the S&P. Alright guys, thank you all so much for watching and supporting the channel. It means a lot to me. I hope you enjoyed it or learnt something new. Don't forget to leave a comment if you've got any questions or if you'd like to roast me on how bad I am at trading. But if you enjoyed, leave a like and subscribe. It makes me very happy, and you can look forward to the next video, which will be the short on the S&P, where I'll focus a bit more on how to use relative strength. One last point, I forgot to mention it, but when you place your trade and you predetermine your risk, if you decided to risk, let's say 1% on your trade, when price reaches that stop loss area, how much are you going to lose? It's not a trick question, it's 1%. So when price reaches your stop loss, if you've decided to risk 1%, you better end with minus 1%. Not minus 10%, not minus 0.1% because you got a little afraid of holding the trade, but 1%. Alright, that's it from me. Take care everyone. Peace.